Want to know the best mutual funds for 2023? Let's start with understanding what mutual funds are. They're essentially a pool of funds collected from multiple investors, which are then invested into a diverse range of securities, such as stocks, bonds, and other assets. This diversification not only spreads out the risk, but also offers the potential for significant returns. Now, mutual funds aren't a guaranteed ticket to wealth. Like any investment, they come with their share of risks. However, their potential for high returns and the ease of diversification make them an attractive option for many investors. When choosing a mutual fund, several factors come into play. You need to consider the fund's historical performance, its risk level, the fees involved, and of course your own financial goals and risk tolerance. Now that you have a basic understanding of mutual funds, let's dive into our top picks for 2023. Kicking off our countdown at number 5 is the Growth Fund. Now let's dive into the details. The Growth Fund, as the name suggests, is all about expansion and advancement. It primarily invests in companies that exhibit potential for above-average earnings growth, even if they may not be the largest or most established businesses on the block. These could be tech startups on the brink of their next breakthrough, green energy firms innovating sustainable solutions, or healthcare companies developing cutting-edge medical technologies. Looking at the past performance, the Growth Fund has consistently demonstrated an impressive track record. It's been riding the high tides of market trends, providing investors with substantial returns. But remember, with high reward often comes high risk. The Growth Fund is no exception. It's considered a higher risk investment compared to more conservative funds, but don't let this deter you. If you're the type of investor who can tolerate short-term volatility for long-term gains, this fund could be an exciting option. So, what makes the Growth Fund a good choice for those seeking long-term growth? Well, it's all about the fund's investment strategy. The Growth Fund targets companies that are projected to grow at an above-average rate compared to other companies in the market. This strategy, coupled with the fund's rigorous selection process, allows it to identify and invest in these high-growth companies before they hit their stride. So, if you're someone who's looking to invest in the future, in companies pushing the boundaries of what's possible, then the Growth Fund could be just what you're looking for. It's not just about immediate returns, it's about supporting and profiting from the innovators, the game changers, the pioneers of industry. But remember, investing is not a one-size-fits-all game. It's important to consider your financial goals, risk tolerance, and investment horizon before making a decision. Always do your homework, consult with professionals, and make informed decisions. For those of you looking for a fund with potential for high long-term growth, the Growth Fund is worth considering. Coming in at number 4 on our list is the Balanced Fund. Now, the Balanced Fund is a bit of a financial chameleon, effortlessly blending into the landscape of your investment portfolio. It's a mutual fund that mixes various investment instruments, typically stocks and bonds, in an effort to balance the risk and reward ratio. Imagine a tightrope walker, teetering on a high wire, with stocks on one side and bonds on the other. In one hand, the potential for high growth that stocks bring, and in the other the stability and income provided by bonds. That's the essence of a balanced fund. In the past, balanced funds have shown a steady track record. They're not the hare that bursts out of the gates only to fizzle out halfway through the race. Instead, they're more of a tortoise, plodding along consistently, offering a sense of security in an often volatile market. The inherent diversity of the balanced fund acts as a buffer against market fluctuations, reducing the risk level. But don't mistake consistency for complacency. Balanced funds can still pack a punch when it comes to performance. Over the years, they've demonstrated a solid return on investment, making them an attractive option for those who appreciate a good balance of growth and income. So, who is the balanced fund best suited for? Well, if you're someone who's looking for a mix of growth and income, if you want to harness the power of the stock market without completely sacrificing the safety of bonds, then the balanced fund could be a great fit. It's like having your cake and eating it too, only in this case, the cake is your investment, and eating it is seeing it grow while still enjoying a steady income. So there you have it, the Balanced Fund. A mutual fund that offers the best of both worlds. If you want a mix of growth and income, the Balanced Fund could be a good fit for you. At number 3, we have the Index Fund. Now this is a unique beast in the world of mutual funds. An index fund's primary goal is not to outperform the market, but rather, to match the performance of a specific market index. This might sound a bit counterintuitive at first, but there's a method to the madness. You see, An index fund is designed to replicate the holdings of a particular index, be it the S&P 500, the Dow Jones, or any other market index. It's a bit like holding a miniature version of the entire market in your investment portfolio. This approach to investing has a name. It's called passive investing, and it's not about beating the market, it's about being the market. One of the key advantages of index funds is their low cost. Because they're not actively managed, they don't carry the same hefty management fees that you'll find with other types of mutual funds. This means more of your money stays invested, and over time, this can make a big difference to your returns. Historically speaking, the performance of index funds has been pretty impressive. Sure, they won't give you the sky-high returns that a hot stock or an aggressive growth fund might, but they also won't give you the heart-stopping lows. Instead, what you'll get with an index fund is steady, consistent performance that mirrors the overall market. And over the long term, this has proven to be a winning strategy. So who should consider investing in index funds? Well, if you're the kind of person who prefers a hands-off approach to investing, index funds could be a great fit. They're simple, they're cost-effective, and they're designed to give you the broad market exposure without the need to pick individual stocks or time the market. For those of you who prefer a hands-off approach to investing, the index fund is definitely worth a look. This is a fund that lets you invest in the entire market while keeping costs low and maintaining a steady and reliable performance. It's a straightforward, no-nonsense approach to investing that's proven its worth time and time again. Just missing out on our top spot at number 2 is the income fund. Now, let's get into the specifics. The income fund, as its name suggests, is designed with one goal in mind: to provide a steady stream of income to its investors. This fund achieves this goal by investing primarily in high-dividend stocks and bonds. Think of it as a bit like a river, constantly flowing with a reliable stream of dividends and interest payments right into your investment portfolio. These high-dividend stocks and bonds are carefully selected by experienced fund managers. These financial wizards have their fingers on the pulse of the market, ensuring that the fund's investments are not only high-yielding but also relatively safe. In terms of past performance, the income fund has an impressive track record. It's consistently provided investors with a regular income, regardless of the ups and downs of the market. However, as with any investment, it's important to remember that past performance is not a guarantee of future results. The risk level of the income fund is typically lower than that of growth-focused funds. That's because it's invested in established, profitable companies that have a history of paying dividends and in bonds, which are generally considered less risky than stocks. Now, let's sum it up. If you're looking for a fund that can provide a steady income stream and you're comfortable with a lower level of risk, then the income fund could be just what you're after. If a steady income stream is what you're after, you might want to consider the income fund. And now, our top pick for the best mutual fund of 2023 is the Total Market Fund. The Total Market Fund is a unique, all-encompassing investment vehicle designed to provide investors with exposure to the entire stock market. It's like a one-stop shop for investors who wish to diversify their portfolio with a single investment. This fund is not about picking and choosing, it's about embracing the whole market. Its main advantage is diversification. By investing in a total market fund, one essentially owns a small piece of every publicly traded company in the country. From the titans of the tech world to the giants of the manufacturing industry, it's all included. This broad exposure reduces the risk associated with investing in a single sector or company. Past performance of total market funds has been quite impressive. Historically, they've generally kept pace with the overall market, providing solid returns over the long term. Remember, past performance doesn't guarantee future results, but it does give us a glimpse into the fund's potential. In short, if your investment goal is to gain broad market exposure without the hassle of managing individual securities, the Total Market Fund could be your best bet. It's ideal for those who believe in the overall growth of the market and wish to maintain a diversified portfolio. If you're looking for a diversified fund that offers broad market exposure, the Total Market Fund is our top pick for 2023.